guys, welcome back to Financial Markets. Hope you're all doing well. Just before we begin with the video, just like to remind you that on the top of the description is my cash tag for Cash App. If you would like to donate, help out this channel in any way possible, it would be very much appreciated. You know, I spend a lot of time and energy and it costs me money to create videos like I do for you now. And so any donations, any help will be very much appreciated, just to help the idea of keeping the channel going and showing that, you know, you guys are all out there enjoying the content and the videos that I'm putting out. Okay, so let's begin with the video. So today I want to talk about a little, well, a big subject that is not talked about that much in trading, and I think people underestimate it a lot, and that's the mental side of trading. It's quite easy for people in general to go into the market and think they're going to make money, put money on the line, but mentally have the balls, if you will, to stick through the position, or it might be the opposite, and to actually have the balls to cut positions off if they need to. And so I thought it would be a good idea to give you a bit of a walkthrough through that, especially because we had a massive drawdown in Q4 2018, as you can see in this region here, where a lot of people were losing a lot of their money. As they say in the industry, they were losing their shirts. And how to sort of react, how I reacted during this point as well, because even for people that are good traders, there are still tons of different emotions that flow through you when you're investing and trading when markets start to turn. So it'd be a good idea to talk a little bit about how I felt and what are the sort of mental sides of trading which you should know of, and how you need to prepare for it. So if you're a long only fund, or if you're majority long, naturally you're having a great ride up until October of 2018. Now when the markets start to turn, and we had a decline of about 20%, I believe, right? A decline of about 20%. Now for the index to drop 20%, that means stocks in general drop more than that usually. So that could be anything from about 25% to about 30, some cases 40%. Now, if you're somebody who had invested before, that could even potentially come back to your buy price if you had gotten, a lot earlier, about here, right? 2 years of gains pretty much wiped out, if you will. Or if you were somebody who ended up buying there and you were losing a shit ton of money. So the natural emotion would be either just you were holding it, but shitting yourself every day because you were losing a shit ton of money, or you'd be somebody who cashed out, but because you got annoyed by making a loss, you then put on other positions and you try to then make that money back, and then you end up losing more money. So the way to walk you through it, or the way to understand it, is when you buy into a position or an index, you should have in mind what your investment thesis, investment strategy is first. So are you holding it long term? Is it an undervalued stock that you're holding for about 2 to 3 years minimum? Are you just trading the position off? If you are then trading the position off, what would your stop loss be? So it could be 10% below the buying price, in which case you should have that limit order ready or have alert ready, and for you to execute no matter what and just get out. And so if the market keeps falling, like they say, don't catch a falling knife, let it fall and let it see how it plays out before you make and re-enter. Because a lot of people then, what they do, oh, it's time to put on my buy here, they hold it and then it starts going back down, oh shit, now sell it, or hold it and then it goes down and then you end up selling it again. So it's a good idea to understand first what you're doing. So yeah, if it was a trade, have maybe a 10% stop loss if that's what your investment thesis is on. Number two is, or the next thing that you could do is keep yourself hedged, because then that way you limit the fear and the emotion that goes through your mind when things start to turn. Now if I was long the S&P here, but I would say short the DAX at the same equivalent level, sorry, the Dow, not the DAX, so the Dow, I want to say Nasdaq 100 if you will, just because it's easier here. So I was long S&P here and short the Nasdaq, so Nasdaq is in the orange. And then at least when the market was turning, what's losing money on the S&P is making money on the Nasdaq, so I'm hedged. So therefore I'm quite neutral of the market. I might be majority still long, but then my losses are minimal. So that's an important factor. So either keep hedged. And other thing is to know that I will make a video, and I think I made a video on this, so if I have, I'll put it in the top right, but about that you always lose money in the markets. There's no way that even if, no matter how good of a trader you become, that you will always make money in the markets. You will lose money, and it's just part of the game. So when you deploy capital to the market, you should be prepared and willing that this is money I am willing, or I'm able, not willing, but I'm able to lose. If I do lose it, it will not affect my financial standpoint It will not affect how I have to live. It will not evict me from my house. It will not put food. It will not stop putting food on the table for me and my kids and my wife. And so that way, if you do lose it, fine. You start again. You try again. But the idea is you should never lose all your capital. If you do that, it means you're not managing risk properly. So that would be the next part. Would be to manage risk properly, which comes back and links to this idea of hedging. So hope those points gave you some idea of the mental side of trading. To be honest, this is a really, really big topic. So if you're somebody who does struggle with this, and a lot of people do, I could potentially start giving you help and advice on this. If you want, you could email me on the about page. You can see my email address. Email me if there's something that you do have a problem with. We could potentially work something out together in which I could help you to succeed in this side of it. Because if you might be a really good trader but just have that problem, in which case if you fix that, you could make good money. So I hope this video was very, very helpful for you. Please do donate to my Cash App, link in the description, and I look forward to seeing you guys in the next one. Bye.